Welcome everyone on this podcast. We're going to talk about how will recession, if there is one, is going to affect the U.S. real estate market. My name is Seewing Yee from the Yee Real Estate Network, and our co-presenter is Mr. Richard Advani from Subprime Lending. He is a loan agent specializing in investment loans all throughout the whole country. So without further ado, let's go ahead and talk about, I know there's a lot of negative headlines out there, and let's provide our own unique perspective and input. And the question is, if there's a recession, how it's going to affect real estate? So I'm going to go over a mere couple of slides. That's it. So if you look at from a historical perspective, if you look at this chart, S&P Case-Shiller Index, way back from 1960s until this decade, the only time where real estate has gone down when there was a recession was right here in the 2008 real estate crash. Any other decade, any other year, as you can see the chart, the real estate value have consistently for the past several decades continue to go up, even though we have a recession. All right. So I don't know, we cannot predict the future, right? No one can. But based on past history and based on the current real estate environment, given that we have low supply still and high demand, I know the interest rate is very, very high, and that has probably eliminated 30 to 50% of the potential primary home buyers out there. We get all that, right? However, the fundamentals are still very strong. And again, we can only rely on past history because, we're not economists, Richard and I. However, we've been in the real estate business for a very long time. We went through more than one real estate crash cycle. So, Richard, what are your thoughts? I know, again, people need a place to live. There's a tremendous shortage of homes to buy, and a tremendous shortage of homes to rent throughout the country, and it's such a massive shortage. So in my mind, as long as the employment situation is still stable, the job market is stable, even though we might go through a mild recession this year or next year, I do not believe the real estate will take that much of a hit. So what are your thoughts on this matter?
Yeah, I mean, it's a cool statistic. I actually, if you saw me kind of busy in the background, I was screenshotting it. I wasn't aware of kind of how this graph looked over time, but that's cool. I mean, it kind of goes back to what I was saying in one of our other webinars, which is, at the end of the day, house prices are not, there's bodies and there's roofs needed for those bodies, right? We all need somewhere to live. So regardless of a recession, that's not going to change. People still need somewhere to live. And it's cool to see kind of that index supporting what I've said and thought, which is, even during a recession, housing continues to increase, except for the one scenario was 2008, where housing was the reason for the recession, right? And that was so far kind of, a unique isolated incident because lending got to where it was like the wild, wild west, and you needed a heartbeat and a pulse to go and buy 5 rentals at once, which was nuts, and no down payment. So obviously a lot's changed since then. And it's refreshing to see that even with historic recessions and downturns that the real estate graph kind of still doing this. So hopefully that's going to be the case entering this recession, if we are in it. You never, with recessions, it's normally looking back at the prior 3 months, so we never know we're in a recession until we already are in that recession. So we will see, of course, in the coming months where the dust settles. But as we've been saying the last couple months, with the volatility, with the increase in rates, real estate still is, amongst the safest bets in terms of where to park your money.
Yeah, Richard, you and I, we from time to time we watch real estate YouTube videos and other, headlines everywhere. I mean, is negative news sells. So there's always people, all those YouTube channels, they want clickbait, they want more subscribers. So the more, scary, words they put out there in the YouTube channel, the more people will click clickbait. So, and we always, every day you see, oh, housing crashing 50%, 100%, whatever, correction, and stay away, don't buy real estate, you have to wait until the crash, whatever. But at the end of the day, the people that bought real estate, whether you are a primary home buyer or investor, even in a mere past 2 years, some of those people have gained equity to the tune of 30 to 50%. In some cases, in certain markets, they have gained value a whopping 75% in equity over the past 2 years, right? And people who bought real estate 5, 7, 10 years ago, the values of their property have gained 50 or 100% in value, in equity. So those courageous primary home buyers and real estate investors that bought, they have reaped tremendous benefit. So when you talk about any potential crash or correction, I don't see the data that support that, because most people's mortgages, let's talk about mortgages. Do you know more than 30% of the US mortgages has been paid off? The other majority of mortgages that are still on the book in the nation, nationwide, they have substantial equity, 30, 40, 50% equity. So in order for any crash were to happen, those mortgage holders, they have to walk away from the houses, and they're not going to walk away because they have so much equity, right? In order to qualify these days, in the past 10 years, ever since the last crash, you are a loan agent. I mean, you know how hard it is to get a loan. You have, not only to put 10, 20, 30% down payment, but you have to have qualify. You have to go through all kind of qualification process in order to qualify to get a loan. I mean, so to conclude, what are your thoughts around that? About, you and I agree the recession will not likely going to hurt the real estate market unless the employment and job market is severely impacted. And then because of so many people that have so much equity on their homes, they're not going to walk away from the homes because they have made so much wealth over the past few years. So what are your final thoughts before we'll conclude this presentation?
Yeah, I mean, I think you made good points in terms of obviously the amount of equity people have, but I think another important thing to note is the affordability of homes is much different, right? Even if someone does run into economic issues, with how low rates are and how low the majority of this country, how low their housing payment is on what they have versus what it is today, I think people will be less apt to walk away from a home knowing that average rent in their market's probably higher than what their mortgage payment is, right? So I think, a lot of people were bandwagoners on the last kind of downturn. Like, oh, my home's upside down 100 grand, I'm gonna short sale or I'm gonna foreclose because everyone else is doing it, even though their payment was comfortable and even though they didn't need to do it, they were just doing it because. There'll definitely be less of that when market rates are 6% for a home and people have a 3% 30-year fixed and market rents $500 a month higher than what their mortgage payment is. Be rest assured those people are going to do what they need to do to still make their mortgage payments. Maybe for the first time in the history of mankind, people not make their Benz payments and make their mortgage payment. And I say that because during the last recession, it was interesting. We would see people in foreclosure, in short sale on their homes, but their Mercedes or BMW payment was never missed. And it's kind of where the priorities were, but also people were kind of gaming the system a little. And that's not going to happen once again when your house payment is $2,200 a month, but the rent is $2,800 a month, right? You're going to make sure you stay in that house more often than not. So yeah.
Yep. So to recap, to conclude this presentation, again, whether there's a recession or not, who knows? No one can predict the future. Real estate is still a very, very healthy product situation due to the reasons that we just talked about. So whether you are a primary home buyer or whether you're a real estate investor, you need to have a positive perspective on all of this. Just invest for the long term. I mean, just overcome all the short-term volatility. Focus on the long term and survive and thrive, and just go from there. So thank you so much, Richard Advani, for your great perspective as always. Thank you everyone for listening. This is Seewing Yee from the Yee Real Estate Network. Have a nice day. Goodbye.